Want to be a better investor? I've got 3 investment truths that were all evident last year, 2023. I've got that and more coming up. My name's Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. We all want to be better investors, and oftentimes we think, well, that's just about making the right move at the right time. And actually being a long-term investor, success and being better at that is actually managing your emotions. And some of that just comes with, well, what's the reality? What's the reality? What's the news and what's the noise? And therefore, it's hard to not look at 2023 as a case study of what it means to be a successful investor, or what it takes to be a successful investor. There are 3 very clear investment truths that you can see in the case study that is 2023. And yet, oftentimes, I call this investment amnesia, investor amnesia, we forget very, very clearly. If it didn't happen yesterday or didn't happen today, it's almost like it didn't happen. We forget. And so these likely are just reminders to you, but they will help you be a better investor. 3 truths on investing. Truth number 1, there's always reasons, multiple, plural. There's always reasons not to invest. Take a look at this chart right here. I've seen this going back to the Great Depression. I've seen it over decades. I've seen it in a variety of time spans. But just look at 2023. Take a look at this. This is an overlay chart of essentially the global markets, okay? But take a look at each of those points in time and all of the issues or the reasons or the obstacles. And if you were an investor, any one of these reasons likely caused you a little bit of concern, or maybe gave you reason to say, no, I should be more cautious or be on the sidelines. The interesting thing about the case study that was 2023, and I talked about this plenty of times, got a lot of questions on it during 2022, is there were a lot of people that were investing that said, you know what? I'm just going to hold off on investing in the stock market until things get better, because it feels like I'm saving up, and every time I look at my account in 2022, my account was down. And therefore, if I put $1,000 into my 401k in a particular month, and when I look at my account, I was down $2,000 for that month, I felt like I was throwing money away. So I'm just going to hold off investing in the stock market, maybe even hold off investing in my 401k altogether until things get better. Well, guys, this is a chart, again, just of 1 year, but you can span it over 100 years of all the reasons why you might not want to invest or why you should be cautious. Obviously, right at the beginning of the year, we hit the debt ceiling. Fed kept raising interest rates. We had the regional banking crisis. A couple of the largest bank failures ever on record happened at the beginning of the year. Fed continued to raise rates. They signaled that they might start pausing rates, and that helped the markets go up. And then Fed raised rates again. The credit rating was lowered. We had another war, and then there was the fear of government shutdown. All of those reasons, right, could have caused any of us who were more cautious or whatever. We could have cited any of those reasons to say, see, the market's about to go down. And it did. It went up, it went down as well. But ultimately, it ended up having a fantastic year, despite all of those reasons why it shouldn't have. One of my favorite investing sayings is the market works at all times to prove as many people wrong as possible. There are always reasons to be cautious, reasons why the market could go down, and yet successful investing is still riding through all of those reasons, knowing that, yeah, the market's going to go up and down, but staying the course despite those reasons. Investment truth number 2, no one can accurately forecast the stock market. Now, I'm not saying that no one's ever accurately predicted or forecasted the stock market, but no one can consistently predict or forecast the overall stock market. I have heard, it's one of my other favorite investment sayings, is one of the worst things that can happen as an investor is to be right, predict something right 1 time in a row. Because oftentimes if you guess something or you estimated something or you forecast something and you were right, it's more than likely it was due to luck as opposed to some clairvoyant way of being able to see the future. So last year, again, 2023 was a case study in this. Almost everyone predicted a rough year in 2023. We were going to see a recession. In October of 2022, there was 100% certainty that we would see a recession within the next 12 months, and we didn't see it. Right? There were reasons, and there were, there were pockets of the economy that were cold. There were other parts that were very hot. I understand the inverted yield curve and all that sort of stuff. I've talked about all those things, and I remain cautious because of it. However, those that then said, no, I can see the future because of these things, they were dead wrong. They were dead wrong. And if you take a look at this article, it suggests that when you look at 22 different Wall Street firms, that the average expectation of the S&P 500 was 7% last year. And of course, the S&P just clobbered that. However, just about every year, I take a look at some of those 10 biggest names and say, hey, here's what they're expecting in the S&P 500. I don't have that right here for the sake of time, but no one was close. No one was close. Just about everyone expected the stock market to be flat last year. Some large investment banks, I believe Bank of America, a couple, and expected the S&P to be down in 2023 as well. So no one can predict the future. And if you say, well, sometimes people have, I get that, but to be able to consistently do so, it's not possible. An individual that I follow, someone that I pay attention when he speaks, is an individual who actually accurately forecasted the great financial crisis. In The Big Short movie was about him. And all throughout 2023, he was very loud talking about his bets and convictions that the market was going to go down. In fact, he ended up, I'm just going to call wagering, gambling, some pretty significant stock options indicating or hoping to profit if the stock market went down, and he lost his shorts on that, and no pun intended there. So no one, even if you've predicted it right or you've got a strong sense, it doesn't mean that the timing's going to be exactly lined up as well. So as an investor and investing truth, again, there's always going to be reasons why you should be cautious. And then when you hear people predict or forecast this is what the stock market's going to do, you need to remember no one can accurately predict or forecast the market. And the final investing truth number 3, market returns are lumpy. When you hear that over a long term, the stock market averages about 10% a year, it's actually a little bit higher than that. Most of us, what we think and what we want emotionally is that it's just steady Eddie. It's just, like pretty consistent. It is not like that. The market does not operate in that fashion. And yet, if you look at long-term averages, it is very consistent. But any day, any week, any quarter, any year, it's very lumpy and very choppy. Again, 2023 is a case study to this. Take a look. We started the year, fantastic January. Gave most of it back with the regional banking crisis. Things started coming back in the summer because, hey, the Fed might be done raising interest rates. And then all of a sudden, the Fed continued saying, well, it's going to be a long battle with inflation, and they were signaling more and more that they might not be lowering interest rates. Guys, by the end of October, really, of all large major investment categories, the S&P 500 or large U.S. stocks were the only ones that were still positive. Again, in this year where we didn't see the recession and yeah, the economy, GDP was going okay. By the end of October, almost all investment categories were negative year to date. And then we get essentially 2 years worth of returns all within a couple of months, right? Out of the blue, with all the reasons to be negative and still cautious, the stock market just goes on a tear and literally gives about 2, almost 3 years worth of returns in just a couple of months. Market returns are lumpy, and I'm not going to go in ad nauseum, but we could go look at several different years where it's the same sort of thing. The market's bouncing around and the pointless ups and downs, then all of a sudden just breaks through and catches many people by surprise. That's why you've probably seen charts like this or sayings like this, where if an investor misses the 10 best days in the market, what happens to their return? Their return is almost half of what it otherwise would have been. And I know, because I've had these conversations and I myself have felt it. I look at this and say, well, I won't miss the best days. I mean, when things are going well, I'm going to be invested. I'm not going to be cautious. No, guys. The best days happen typically when people are the most cautious, and then all of a sudden there's a surprise. If you look at the 10 best days or those best days, they normally happen during extreme market environment. So yeah, 08 and 09. Yeah, those included some of the 10 best days. What about during March of 2020? Yeah, that included some of the 10 best days. And so oftentimes we look and say, well, no, I'm not going to miss the best days. I want to avoid the worst days. Now, the best days happen right around the worst days or during the worst times. And therefore, it's very easy to say, nah, I'm just going to wait until things get better, which again was sort of a theme for 2023. And you missed it, and you missed out because market returns are lumpy. So those are 3 investment truths, okay? 3 investment truths that can help you be a better investor, manage your emotions when things aren't going well, when there's reasons to say, hey, things could go south from here, or what about this risk? What about this looming danger? And then all of a sudden, wham, markets provide a lot of return in just a short period of time, catching most people off guard. So those are 3 investment truths that can help you be a better investor. Work with your certified financial planner. Make sure you've got the right investment strategy that fits with your overall comprehensive financial plan. They can help you with that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us here as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.